Most excellent having you stop by. I'm John Zidar. This is On Top and Hot. And now what I normally like to do on this show is to share hot penny stocks with you. You see, I'm a day trader. I trade stocks under $5 every day. But on the weekends, I like to do something different. I like to share my own personal trading insights with you. Information I think can help you trade better. Now, as most of you probably know, I trade every day over at my Pennybois Discord group. We are a Discord group focused on helping people learn how to trade whatever it is you trade, whether that be blue chip stocks, penny stocks, options, where you're an aggressive scalper or you're a passive long-term holder. Whatever it is, we have people there to help you. Well, we have lots of people that come in every single day from the general public. I've got a link down at the bottom there. It says this is the link to Pennybois. Click that. It'll take you to Discord. If you haven't gotten an account with Discord, easy to get. Just give them an email, password, username, voila, you've got a Discord account. They will automatically send you over to us. On the left-hand side is a menu. Find the free member page. Click it. I'm in there, Stock Wizard. We are trading every day with anybody and everybody. Team members, members of Pennybois, the general public, people like you. And we have lots of people coming in who have never traded before, have no idea what the charts are. When I ask them what ticker they're looking at, they don't even know what ticker means. Yes, we've got to all start somewhere. So this is going to be the most basic of all videos I've ever done. This is for the brand new trader who, when he looks at the chart, has no idea what he's looking at. It just looks like a big mess. So what I want to do today is start on the top of the chart and work our way down and just identify what we are looking at and what they do. Now, this is going to be a general coverage. We're not going to get into all the deep aspects. A lot of the things I'm going to point out, I do have videos on, and if I don't, boy, there's lots of information out there, folks. Don't be shy about doing your due diligence. Once you know what it is you need to know, then you can go out and find that information. So we're over here at my free trading platform, Thinkorswim. Now, this is going to work regardless of what trading platform you're using. We're going to be using the base information that all platforms use. Call it the cake. Every platform has its own special frosting. We're not interested in all the frosting. We're just going to look at the charts and what it is we are trying to see on these charts, what each line means, what each bar means. As I said, we're not going to go in deep, but I'll give you a general description. So it doesn't matter what chart we look at. I've just pulled up a chart here and we're probably going to be bouncing around. So let's start at the very top. You come to a chart. Up here in the corners, you're going to find the ticker. TICKER. The ticker is the abbreviation for the company's name. It is a group of letters. You don't ever have numbers in there. It's always letters. So this is your ticker. It is an abbreviation of letters that represents the company. You have the company's name. You have the price currently for the stock. Now, the price does not change up here during aftermarket, pre-market hours. You've got to look down here to find that price. But this is where the price sits. Next to that, you're going to get your percentage gains, how much she's going up or how much she's going down. And next to that is your bid and your ask. Very important in trading, folks. The bid is the best price that somebody wants to buy the stock for. The bids are down here. It's actually called level 2. Level 2 is the order book. These are the orders for the stock, buying and selling before they actually happen. Before the transactions occur, you get to see the orders in the queue, in the line. Over here are the buyers with the best price at the top. That is going to be your bid up here. And then you have your ask. These are your sellers. This is the best price that sellers are offering right now up at the top, and that's up here at the top. Now, you've got to pay attention to your bid and your ask. If they are real close to each other, you can normally get some good movement when any volume comes in. When you have a big spread between your ask and your bid, normally the price is going to be somewhere in the middle between the two of them, and that has to close up before the stock starts to move. All of these charts have different time frames, kind of like looking at something with a magnifying glass or looking at it through a telescope. You can get a big picture or a very close-up picture. Up here, somewhere on your platform will be a time element, and you can go anywhere from, well, you can go down to seconds. This is a 1 day, 1 minute chart. This is covering 1 day. That's what the black area is. The gray areas are the pre-market and aftermarket areas. We have 5 day, 5 minute, very common. That's actually a 5 day, 15 minute. We've got that as well. You have the 20 day, 1 hour view, which is very, very popular. You have the 6 month, 4 hour view. Then you have the 1 day, 1 year view. This is what a lot of traders use to start with. They start with the big picture, see where the overall trend of the stock is going. Is it going up or is it going down? And then they start to focus in on it so that they can get the movements that are currently happening, getting the best buys and the best sells. And this can go all the way up. I'm at 1 day, 1 year. You can get 2 days, 2 years. 1 day, 2 years. You can go up to 3 year, 1 week. These bars on the charts, folks, these bars represent the time element of the chart. This is a 3 year, 1 week chart. So every bar on the chart represents an entire week of trading. When I come down to my 1 day, 1 year, every bar represents 1 day of trading. So forth and so on. 10 day, 30 minute, every bar is 30 minute. And as you would presume on the 1 day, 1 minute, every single bar represents 1 minute of trading. Now, the bars you're looking at here are going to probably look different on a lot of the charts that you look at because there are different types of bars that you can use. This bar that you are looking at is a Heikin Ashi. Heikin Ashi has no gaps. They fill in all the blank areas, so you never see any zones where there's nothing. You don't have little dash marks. You always have a solid green or a solid red bar. The other neat thing about Heikin Ashis, and I can't explain why, but every bar starts in the middle of the previous bar. I don't know why, but I really like this because I can see the lines very clearly. I can see patterns. You see cup and handles, you see head and shoulders. We're not going to go into patterns, but there is a lot of bullish patterns and bearish patterns that you can recognize on the chart. They're just shapes. And when you see these, 8 out of 10 times you can normally expect to happen what we expect to happen. But there are other bars that you can use. Let me show you a couple of them here. This is actually called the bar. Now, I'll try it again. The bar. Okay, I've got them. You just can't see them. Those are bars right there, folks. Now, I have never used a bar, and I can't explain what I'm looking at here. I am not familiar with bars. Let's take a look at what you are most familiar with, and those are candles. Most people are familiar with candles. They look a lot like Heikin Ashi, but they start exactly where the price starts. And you do get dashes. When you have one trade, it just jumps up and it leaves a gap in between there. And depending on what chart that you're looking at, let me see if I can grab one here. You see how many bald spots we got in there? Look at all those bald spots. Now look at the Heikin Ashi. You can definitely see a difference. Right? Completely different. Completely. Solid. We can see all the outlines. We can see shapes easier. So personally, I like to use the Heikin Ashis. The next thing you're going to be noticing on these charts are these squiggly lines. They're on all the charts. Each one of these lines represents a certain amount of time. Again, just like we have up here. The red line here is representing 200 days of data. It takes 200 days of prices, averages them together, and puts a point on the chart, at least on your 1 day, 1 year chart. On your 4 hour chart, it's taking 200 4-hour periods of time. On your 1 minute chart, it's taking 200 1 minute periods of time, averaging them all together and putting a point on the chart, and that creates the line. So this is the average price for the stock over 200 days. We also have a 50-day MA, that's the yellow one. We have a 20-day MA, the orange, and then you have the blue one, which is your 9-day MA. Now what I'm using, the 9, 20, 50, and the 200 are the most common. There are a little variations. The 20 sometimes is a 21 or a 26, but they're all there in that same region. What is the purpose of the moving averages? Well, they tell us the average price. If our bars are underneath the average price, obviously it's undervalued, right? So we want to get the price over top of all these lines. Whenever your price is underneath the lines, it's in a bad position. You want these lines all underneath the price. You want the smallest one at the top, a 9, then the 20, then the 50, then the 200. Heaviest on the bottom, lightest on the top. And you want your price on the top of the 9 floating. Something to keep in mind, you new traders. The price does not have wings. If it starts to climb really high, don't ask, how high is this going to go? You need to ask, when is this going to come down? The price can only go up so high because it's a kangaroo. It has to jump and bounce off of something. And that's what these MAs are. That's earth. That's ground. She can jump and bounce on any one of these. So what else can we look at here? Well, let's look at some of our oscillators. This is my volume. You know what volume is. Now, a lot of your charts will only put the volume in one color, like blue. And you can't tell if it's buying volume, which is green, or if it's sell volume, which is red. You really do want to know that. So you should choose to separate your volume. We always want to find as much volume in a trade as possible, especially if you're trading a day trade. You want as much volume down here as possible. Lots of green bars. You want the price climbing. You want all your lines climbing. That's a hot chart, folks. You want to recognize a hot chart is very, very simple. All these lines we were just talking about, these MAs, you want the MAs to be going up. All the lines should be rising. I'm looking for a riser right now. Same thing with the bottom right here. Now I'm going to get rid of all of these horizontal lines. These are supports and resistances, folks. These are not on the charts automatically. We have to draw these. Supports and resistances are drawn at places where the price hits its head and bounces and falls down, or it comes down and bounces and goes up. In other words, wherever the price changes direction often. And we like to trade using these. We get in over top of one and get out underneath one. But for right now, I'm just going to get rid of all these so that it's easier to see the chart. So a hot chart, you want all of your MAs, all of these lines pointed up. That's a hot chart. You want green bars. That's a hot chart. You want your price climbing. Right, hot chart. You want to make sure that your price is sitting on top of that 9-day. If she starts to pull up too far, remember, kangaroos don't fly. She's going to have to come back down. And hopefully she'll just land on the 9. If she's coming down hard and fast, people start selling quickly, the price can come way down here, and then we're looking for it to bounce off of one of these other MAs down here. My next oscillator that I use is my PPO. This is a percentage price oscillator. Same thing goes on down here as up on the charts. You want your lines climbing. I don't know of any oscillators where it's good if something's pointed down. You want these lines climbing too. Our PPO, percentage price oscillator, this is a lot like your MACD. Lots of people use the MACD. Now, I can't explain how these work. You can do some more due diligence there. But the MACD uses the full price, and the PPO, percentage price oscillator, uses a percentage of the price. They are cousins to each other. And I like to use them both because they don't always read the same, and the differences can make a difference. Same thing goes here. You want that blue line on top of the other line, and you want it climbing. This all looks hot. Now, the one in the middle is the ADX. This is one I think you should focus on and really learn because it gives you a lot of information, folks. This tells you if you have a trend going up or a trend going down. That's the green and red lines. When the green line is on the top up here, it means it's an uptrend. That's easy. When the red line is up on the top, it means it's in a downtrend. Now, you're looking at the chart and you're saying, well, why do I need a line to tell me that? Because when things start to change, this will tell you the change is coming before the board actually shows it to you. This yellow line down here on the bottom is weak. So the yellow is very weak right now. Now she's at the very top. It's very strong. What that is the ADX line itself. The green line is the positive directional movement, DM plus. The red line is the negative directional movement, DM minus. So we know what we have going on. A positive trend, it's climbing. And the yellow line, the ADX, tells us how strong the trend in motion is. Well, this says the uptrend is very strong right now. So CTM right now is a very strong chart. Everything is climbing. This is perfect right now, folks. So that's what you're looking for a strong chart. All your lines going up. Green, things floating on top of the lines. Very easy to recognize a hot chart. Already mentioned my MACD. Down here is our RSI. The RSI is the Relative Strength Index. This primarily goes up whenever the price is rising. It comes down whenever the price is falling. But it shows you how much activity there is. Underneath 70 is strong. All right, let me back up here. The RSI runs from 0 to 100. I don't know why this goes on and on, but it's supposed to only go to 100. We call 70 the ceiling. You get over 70, it's a hot, hot stock. You can see it because it goes red. And the higher it goes, the hotter it is getting. The more orders that are coming in fast, and the price is rising fast. So orders coming in fast, price rising fast, you've got yourself a volcano. It is erupting. Down here is our floor. Even though it goes down to 0, we call 30 the floor. When you hit 30, you're in bad shape. You're in a serious downtrend. When she goes underneath it, she turns blue, like she's frozen. It's very cold. Cold chart. So again, all of your lines on all of your oscillators, as far as I know, should all be pointed up if you are looking for a hot chart. MA's rising, oscillators rising, price floating on an MA. Hot chart. Now, I don't think there's a whole lot more that I need to share with you so that you can trade, but there's a whole lot more that you can learn. You see, I have got like 5 oscillators down here. How many oscillators are there? Oh my God, folks. All of these are different tools. I don't know, a couple hundred tools in there, and I am not familiar with most of them. Matter of fact, I have one extra line that most people don't use. I have the 200 Hall. That is a secondary blue line right here. Now let's see if I back this up and you can see. Let's find a different one here. All right, you see my 200 Hall is purple right there, and then it turns blue right when it changes from the downtrend to the uptrend. I did this on purpose. I wanted to know when my 200 Hall was in an uptrend because the 200 Hall has the same amount of power and the strength as the 200 MA. But there's a difference. The 200 Hall takes 200 days of prices or 200 minutes, whatever it is, averages them all together, but then puts more credence and weight on current prices. It relates to the price. The 200 MA is a stranger, never gives a consideration to the price. The 200 Hall does. You're going to see the 200 Hall when it is underneath the price and turns blue will start to help the price to rise. And when it is underneath the 200 MA, it'll act like a baseball bat. And the price is the ball. And that price will come down to that 200 Hall, and when it touches it, the 200 Hall will smack it right out of the ball field. It'll go through all of the MAs up to and through the 200 MA. So the 200 Hall is one I've added. I'm not going to say it was a mistake. I was experimenting. I knew there was a lot of different oscillators out there, and I hadn't tried any of them. So I just threw this up on the board to see what it would do. Well, I've been using it for 2 years now, and I've learned to understand the 200 Hall. And if I could advise you anything, I would say add the 200 Hall and the ADX with the DMI positive and the DMI negative onto your charts. These have been the best 2 oscillators I have had. Now, of course, I use them all, but these are the 2 I rely on the most. So hopefully I've given you enough base information here that you can look at a chart and understand what it is you're looking at. Now, to understand how to read it, that's a whole nother game. And there's a lot of information out there, but this is where you need to start. You got to know that you got to hit the ball before you go to the base. And you got to hit the first base before you can get to the second base. Learn the basic rules and then get better from there. I hope I've started you on the right foot. Remember, folks, the more you know, the more you're going to grow. See ya.